Record run continues on Wall Street as S&P 500 and Nasdaq close at all-time highs. Fed Chairman Jerome Powell, in his testimony before the Congress, says holding rates high for too long could hurt economic growth. Stocks in the Asia-Pacific slipped despite a strong handover from Wall Street. Inflation data in Japan comes in line with estimates, while investors will also be watching out for inflation data from China. The GIFT Nifty is also suggesting a muted start for the Indian market. Crude prices declined for the third straight day. Brent slips below $85 as refining infrastructure on the U.S. Gulf Coast remains relatively unscathed from Hurricane Beryl. Gold remains steady around $2,350 an ounce. Tata Motors announces price cuts for SUVs. The price of Tata Harrier has been reduced to 15 lakh rupees, while the Tata Safari will now retail at 15.5 lakh rupees. M&M also follows with price cuts, reducing the price of its top XUV 700 model to 19.49 lakh rupees. The BCCI announces that Gautam Gambhir will take over the reins as head coach of Team India. Gambhir will succeed Rahul Dravid, who steps down after a successful T20 World Cup campaign. Good morning in the Mumbai News Center. I'm Sonal Bhutra and you're watching Power Breakfast. Those are the top headlines and we'll be discussing them in greater detail as well. But first up, let's take a look at the Asian markets. It was a strong handover from Wall Street. However, Asian markets are quite mixed right now. Nikkei is trading at the day's high. The Hang Seng too is doing well, up around 233 points. We got the Chinese inflation data, which came in lower than what the street was working with. The inflation grew 0.2% versus an expectation of 0.4%. And the Japanese wholesale inflation data is something that the street is assessing as well. But largely a mixed picture, you have to say, for the Asian markets. Shanghai is lower. We have Kospi, which is trading with cuts. So is the Taiwanese index. But Hang Seng, that is in the green, up around 233 points. If we look at the GIFT Nifty, that should come up for you on the screen, and that will indicate the move for our own markets. Absolutely flat with some negative bias right now. But remember, we did see that sharp move in the last hour of trading session yesterday. Markets closed higher. We'll have to see which way things go today for our own markets. And in the US market, Wall Street saw a mixed session that pushed Nasdaq and S&P to new record highs. The S&P edged up 4 points while the Nasdaq added over 25 points. The Dow Jones ticked down 52 points. Investors are now awaiting the June Consumer Price Index report due tomorrow, with core CPI expected to rise 3.1% YOY. Also on Friday, the June Producer Price Index data will be released, which is expected to rise 0.1% on a month-over-month basis. Speaking to the Senate Banking Committee as a part of his semi-annual address to Congress, Federal Reserve Chair Jerome Powell cautioned that keeping rates elevated for too long could stunt economic growth. Let's listen in.
The Federal Reserve remains squarely focused on our dual mandate to promote maximum employment and stable prices for the benefit of the American people. Over the past 2 years, the economy has made considerable progress toward the Fed's 2% inflation goal, and labor market conditions have cooled while remaining strong. Reflecting these developments, the risks to achieving our employment and inflation goals are coming into better balance. Recent indicators suggest that the U.S. economy continues to expand at a solid pace. Gross domestic product growth appears to have moderated in the first half of this year, following impressive strength in the second half of last year. Private domestic demand remains robust, however, with slower but still solid increases in consumer spending. We have also seen moderate growth in capital spending and a pickup in residential investment so far this year. Inflation has eased notably over the past couple of years, but remains above the Federal Open Market Committee's longer-run goal of 2%. After a lack of progress toward our 2% inflation objective in the early part of this year, the most recent monthly readings have shown modest further progress. And more good data would strengthen our confidence that inflation is moving sustainably toward 2%. We know that reducing policy restraint too soon or too much could stall or even reverse the progress that we've seen on inflation. At the same time, in light of the progress we've made both in lowering inflation and in cooling the labor market over the past 2 years, elevated inflation is not the only risk we face. Reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering adjustments to the target range for the federal funds rate, the committee will continue its practice of carefully assessing incoming data and their implications for the evolving outlook, the balance of risks, and the appropriate path of monetary policy.
Okay, all right, let's now get to the final update on our global market wrap this morning. European stocks closed lower on Tuesday as investors weighed up political uncertainty in France after Sunday's election results. The French CAC ended the day lower, over 1.5% lower, while the British FTSE slipped 0.6%. The Pan-European Stock 600 index provisionally ended the day down 0.99%. All right, that's the global market action, but how will these overnight cues impact our own markets? We have our research team joining in with what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. First up, Hormaz is joining in to get us all the market cues we need to watch out for today. Good morning, Hormaz.
Good morning, Sonal. And the setup has been sluggish, as has been the case over the last few trading sessions. But there have been enough and more index heavyweights that have ensured that the Nifty continues to move higher. And there was, despite the lack of participation yesterday from Reliance Industries and from HDFC Bank as well. Now, if you can see, the Nifty continued to trade in a range. Yesterday's range was around 112 points. But even then, the Nifty continued to move higher, made a new record high as well. And what will give the bulls more confidence is the fact that the Nifty ended near the highest point of the day, which was near the levels of 24,440. So that will give the bulls a lot of confidence. There was, as I mentioned, there were enough and more positive triggers for the market yesterday. The record MF equity inflows that came in from the AMFI data yesterday, that gave a boost to the market. And there was auto, FMCG and ICICI Bank, which pulled the index higher in yesterday's trading session. The institutional flows were also positive. Both foreign and domestic investors were net buyers in yesterday's trading session. So that was another positive. The broader markets were subdued, the mid-cap and the small-cap indices, but there was plenty of stock-specific action that continued to move within the broader markets. And the high-flying stocks of the last month, which have been the railway stocks, that saw some bit of profit booking yesterday. IRFC, IRCON, they all made, RVNL also, all made new highs yesterday, but then came off very sharply and saw some bit of correction yesterday, as did the shipbuilders, all of them, Mazgaon Dock, Cochin Shipyard, all of these also saw some bit of correction yesterday after having a 70-80% move in the last 1 month. Some important cues to watch for today. The Nifty Bank weekly expiry today, so that will keep the index in focus. There are two listings today. The MQR Pharma listing, the IPO was subscribed almost 70 times. The Bansal Wire listing today as well, that IPO was subscribed almost 60 times. And block deals are back in focus today. That may have, we may see some in delivery and Mankind Pharma. And the Gift Nifty is indicating a sluggish start for our own markets as well. Back to you.
Okay, all right. Thank you so much, Hormaz, for that. Let's go across to Sudarshan now. A lot of stocks on his radar today. Good morning, Sudarshan.
Morning, so we'll start with JSW Steel, which has released its quarterly update. Q1 production is lower due to planned maintenance. Total production was down 4%, and India business production has come in 1% lower year-on-year. Adani Ports has got letter of intent to develop, operate and maintain berth number 13 at Deen Dayal Port in Gujarat. And this LOI is for a 30-year concession period and to be commissioned during FY 26-27. Infosys has bagged 5-year order from Sector Alarm, which is an affiliate of KKR. M&M has reduced price of its top XUV 700 model to rupees 19.49 lakh ex showroom Delhi. Havells has announced expansion with an investment of rupees 375 crore and will be expanding capacity of cables to 41 lakh kilometers from 33 lakh kilometers in Alwar in Rajasthan. Mankind Pharma sources a Capital Group affiliate, Hema CIPEF, may sell 0.9% equity via block deals, and issue size for the same is rupees 763 crore and price is rupees 2061 crore, which is a discount of 2% to CMP. Delivery sources a Canada Pension Plan Investment Board may exit the company and sell 3.2% equity via block deals today, and issue size for this block deal is rupees 886 crore and offered price range is rupees 378 to 389 per share, which is at a discount up to 3.5% to CMP. Delta Corp has released its Q1 earnings. Q1 is normally a weak quarter for the company. Revenue has slipped 30%, EBITDA has fallen 68%, and margin has slipped to 17% from 37% in the same quarter last year. KIMS has acquired 200-bed Queen's NRI Hospital in Vizag for rupees 75 crore, and last is RVNL, which has got order for project worth 187 crore from Maharashtra Metro Rail. So these stocks might be in focus today.
Okay, all right. Okay, all right. Thank you so much, Sudarshan, for that list. Let me go across to Mangalam. He's joining in with all the cues from the F&O space this morning. Good morning, Mangalam.
Good morning. So the Gift Nifty is indicating a flat start, but importantly, yesterday after a flat start, we build on to those gains, and the frontline indices, both the Nifty as well as the sensex, hit a fresh record high. The interesting part about yesterday's trading session was it was led by multiple sectors. It wasn't just one sector which was weighing in. So we had the autos doing well, FMCG, ITC actually contributed a fair bit as well. And the Nifty Bank too, led by SBI, was doing well. But what we also need to know is that over the last two trading sessions, while the market has moved higher, as has the volatility. In just the last two sessions, we have the India VIX higher by almost 15%, and we do have big events lined up ahead, not only from the globe, but also our own result season, along with the big budget that we build up to on July 23rd itself. So there you have it, a 5% move yesterday, followed by a 7-8% move in the previous trading session. But FIIs and DIIs both buying in cash markets for 3 sessions in a row. That's keeping our markets afloat. And after 2 days of taking some long positions out of the system, the FIIs bought once again in index futures. So about 10,000 long contracts is what they added. And what was interesting is that they added more Nifty and they sold Nifty Bank. So of the 500 crore net buy, the Nifty purchase was 717 crores, whereas for the Nifty Bank, it was 215 crores, which was what the FII sold yesterday. And that's going to be an important index to watch out for today as well. Why? Because one, it is weekly options expiry. It's a Wednesday. And secondly, HDFC Bank is well below its 20-day moving average. So if HDFC Bank moves ahead, the Nifty Bank is something that we'll have to keep an eye out on. For the Nifty, the range continues. The 24,400 call writers are pretty active for a premium of 100 rupees. At the same time, we've seen put writing at 24,400 and 24,350, telling you that the market's base has moved higher. So what these option writers are hoping for is support around 24,300 to 24,350, which is a good 200 points higher than the earlier base, and congestion around 24,500. The Nifty put call ratio has moved closer towards 1.3. Remember, it indicates a bit of a top out near 1.4. So maybe if the Nifty was to go around that 24,400 mark, we would see an increase in the put call ratio and a concomitant increase in the congestion levels for the Nifty as well. Maruti is one stock I'll be watching out for. Yesterday saw a big move, but about 170 rupees from here, 13,000 call as the maximum open interest. So how much more upside is left on Maruti is something that we'll have to track. Balrampur Chini and IEX have entered F&O ban. Hindustan Copper is out of F&O ban. So those are another couple of stocks that we'll be watching out for today.
Okay, all right. Thank you so much, guys, for joining us. That is our Power Prep segment. But let's stay with the F&O space. Sources tell Money Control that a panel set up by market regulator SEBI is likely to come up with a number of measures to control the frenzy in the F&O space. The measures proposed may include increasing lot sizes of derivative contracts, restrictions on number of weekly options, intraday monitoring of position limits, and higher premiums closer to expiry as well. The suggestions made by the panel will be reviewed by the Secondary Market Advisory Committee before a final decision is made. We'll slip into a break now. More news and updates will follow on the other side of the short break. Stay tuned. Welcome back. You're watching Power Breakfast on CNBC TV 18. Uncertainty continues for online pharmacies even close to 6 years after a plea challenging the sale of online medicines was first taken up by the Delhi High Court. Yesterday, the government told the court that it has not been able to frame a policy even after the court directed it to do so back in February 2019. Ashmit Kumar joins us now. Ashmit, this case has been going on for close to 6 years now. How has the court responded to the centre's admission?
Well, this leaves a very big grey area, especially for online pharmacies. Not enough clarity coming in either from the government or from the Delhi High Court. The Delhi High Court, of course, repeatedly prompting the centre to come out with a policy. You're right in pointing out that these petitions that were filed before the Delhi High Court were filed way back in 2018. It's 2024 now. Nearly 6 years have lapsed, and despite repeated reminders from the Apex Court, no policy decision has been taken by the government. No policy framework has been developed. In fact, very clearly in November of 2023, the High Court, in fact, had expressed its frustration by saying that, look, it's been 5 years and despite repeated requests, there is no policy action being taken by the government. Finally, in March of this year, a final opportunity was given to the centre. 4 months' time was allowed to the centre to go back to the drawing board to come out with a policy framework. Again, no decision, and that was conveyed to the Delhi High Court. The High Court now proceeding to deciding this application, which deals with the issue of whether or not to allow online sale of medicines. What is equally critical is the arrangement in the interim interim period. What happens until the Delhi High Court takes a decision? Is there or is there no restriction on sale of online medicines? Well, that importantly is again a disputed question. The chemists, which are the petitioners before the Delhi High Court, they argue that they cite a December 2018 order of the Delhi High Court which restricts the sale of online medicines without a valid license. And this is where, in fact, the e-pharmacies are pointing out lies the rub. The e-pharmacies are pointing out that the Delhi High Court says that online sale of medicines is not allowed without a valid license. E-pharmacies are claiming we do have a valid license, and therefore the Delhi High Court restriction order does not apply on us. So clearly more clarity is awaited. The Delhi High Court is scheduled to hear this case on the 3rd of September.
Ashmit, thank you so much for joining us with all those details. We'll keep coming back to you for more updates in this one. Let's move on. The union budget is just a few days away. My colleague spoke to the management of Azure Hospitality, Wow Momos and Chayos to understand their expectations from the upcoming budget. Listen in.
For us, a one-window policy, which basically allows us to operate and open restaurants faster. A one-window policy which basically makes things similar in each state, and the availability of licensing done in a manner which allows our openings of restaurants and existing restaurants, renewals, to be done in a manner which is seamless. That's point one. In regard to GST, we are one of the industries that do not get input on our expenses. We've been trying to discuss this with the government, with the finance ministry, with the various different state ministers in respect to the various states and the GST council. We're hopeful, we're engaging. We want a dual policy where we can have a 5% and a 12% with input, which basically allows us to offset the expenses that we are incurring today, and also allows us to spend more money on capex, which allows us to open more restaurants, hence more employment and more revenue for the government.
We want one nation, one regulation. Across states, compliances regulations are very, very large. LG met them yesterday and he's trying to simplify this, so hope that's a welcome move. But yeah, regulations, compliances are very, very high in this industry, and we really need to avoid duplication of work. Ask from the government definitely is for GST input. Like I said, we don't get GST input, so there's duplication of taxes. We pay GST on rentals, then whatever 5% GST we take from the customer, we pay that also to the government. We don't get the input credit, which is a must for this industry, because there are so many restaurateurs who are not able to meet ends, are still running in losses, and getting GST input would make them profitable overnight. At the same time, the benefit would be passed on to the consumer, because see, if you are able to control inflationary measures without taking up pricing and get some kind of a positive margin by GST input, the benefit goes on to the consumer.
Our biggest demand is please give food services industry industry status, because it's worthy of it given the size. Set up a separate ministry for food services industry, because our challenges are extremely unique as compared to any other industry, and therefore it's all the more essential for our challenges to be dealt with effectiveness. Allow input tax credit for food services industry, because it is unnecessarily leading to double taxation for many years, and there is absolutely no pro-consumer argument for not having input tax credit. There are only pro-consumer arguments with input tax credit, not in the lack of it. And lastly, it is in the best interest of the of food services industry for it to be enabled to run 24 hours a day, and just open it up from licensing point of view.
All right, that's what coming in from food players, food industry players, that is. We'll slip into a break. Up next, we'll get you all the cues from the commodities market, so stay tuned for that. Welcome back. You're still tuned into Power Breakfast. It's time to talk commodities now. Manisha Gupta is joining us with all the update as always. Manisha, good morning. What is the commodity that you're focusing on today?
Well, thank you for that, Sonal. The markets are reacting to the Powell testimony to the bankers yesterday, where he has signaled caution over leaving interest rates too high at a level. While that has taken the US dollar index and treasury yields to the higher side, and we have seen that reaction come in for prices. But having said that, after 3% of decline in last 3 days, the crude oil prices seem to be coming back. While there is pressure because of the Hurricane Beryl making landfall in Texas as a Category 1 hurricane, Beryl also has eased without impacting oil facilities too much. The Canadian wildfires seem to be lessening, so that is also taking some premium off the prices. But the markets will watch out for the data today for crude inventories. Last week was a very sharp decline, and if you continue to see that this week, you could be looking at some price support. Also, an EIA report says that the global oil demand will outpace supply in 2025. So that premium also will build up in prices right now itself. In the metals other sector, we've seen some profit taking because of the strength in US dollar index. So whether it's copper, which was trading at a 1-month highs, has seen a decline, while copper is still 5% up in July. We also have seen some decline come in for steel, iron ore. The gold and silver prices also are off highs because of dollar strength right now.
Okay, all right. So that's what's happening with the commodity space because of Fed Chair Jerome Powell's testimony to the Congress. Thank you so much, Manisha, for getting us all those details. Let's talk about sports now. The BCCI Secretary Jay Shah announced the appointment of Gautam Gambhir as the Indian cricket team's head coach last evening. The announcement came via a tweet from BCCI Secretary Jay Shah's X handle. Reacting to his appointment, Gautam Gambhir, via a post on X, said, "India is my identity and serving my country has been the greatest privilege of my life. I'm honoured to be back wearing a different hat." Gambhir is expected to assume duties for India's tour of Sri Lanka that gets underway later this month. And less than 3 weeks to go for the Paris Olympics, the Indian contingent will be looking to better its medal tally of 7 from the Tokyo Olympics, which was its biggest haul in a single edition. All eyes would, however, be on javelin superstar Neeraj Chopra as he hopes to become the first Indian to win 2 Olympic gold medals. Matthew Thomas gets us more on the rise and rise of the superstar.
India's best athletes have their sights set on gold as they head to Paris. And one of these stars who has already had his taste of Olympic gold is javelin throw ace Neeraj Chopra. And there's no doubt that he's looking for more in these games. India's first Olympic gold medalist in track and field, he's the man with a rocket for a right arm, and he's won every major honour a javelin thrower possibly can, beginning with his historic gold in the Tokyo Olympics 2021. His place in the Indian Olympic squad was sealed with an 88.7-metre throw in August 2023 at the World Athletic Championships. That's higher than his gold medal-winning throw in Japan. Consistent excellence was the 26-year-old's modus operandi before his historic feat, and that has only amplified since the spotlight was thrust on him. In the last 3 years, he has won a series of first and second place finishes, including a second gold at the Asian Games in 2023. As he heads to Paris, Chopra is looking to add to this medal tally and book another slot in the history books as India's first 2-time Olympic gold medalist outside a team sport.
Okay, that's all we hope and pray for, right? That India does really well, better than what they did at Tokyo Olympics. But with that, we'll take your leave on this edition of Power Breakfast. Bazaar Morning Call comes up next.